Good morning. Let's start working on problem 4-2A, which is our homework problem for chapter 4. In this problem, we have Len Kumar, who started a consulting firm on June 1st, 2017. They're given us a trial balance at June 30th, and the items listed over here, the account names listed over here are cash, receivables, supplies, prepaid insurance, equipment. These are all assets, so they have a debit balance. Accounts payable and unearned service revenue. These are liabilities, therefore have a credit balance. Common stock is an equity account with a credit balance. Service revenue is an income statement item. It's also part of the equity with a credit balance. And then finally, we have two expenses, salaries and wages expense and rent expense. As the name suggests, these are expenses, income statement items, but they also are equity items that reduce equity, and therefore they have a debit balance. Then they tell us, in addition to those accounts listed in the trial balance, the chart of accounts also contains the following accounts. They've given us a list of account names, and then they've given us 7 additional pieces of information. We've been asked to prepare the adjusting entries for the month of June, post the adjusting entries into the ledger, and then finally prepare an adjusted trial balance at June 30th, 2017. Therefore, this trial balance that's given to us is called the unadjusted trial balance. The adjusted entries they're not transactions, but we are adjusting our books to reflect transactions that have already happened or other events that have happened. So let's switch gears and move to Excel. In Excel, I have copied down the trial balance and I've called it the unadjusted trial balance, just to distinguish that from the adjusted trial balance. We will be working through adjusting entries, which will be in the journal. I have opened T accounts with the beginning balances as was presented in the trial balance. So cash, for instance, had a balance of $6,850, accounts receivable $7,000. So you will see I have cash account $6,850, accounts receivable $7,000. I've listed all the accounts over here. Now the additional accounts that were mentioned over here, I've created accounts for them as well over here, T accounts for them. And you will notice I have listed them in a particular order. So the first set I have are all my assets: cash, receivables, supplies, prepaid insurance, equipment. Below equipment, I have accumulated depreciation, which is a contra asset account. So I've listed it over here. Then I have my liabilities. Accounts payable and unearned service revenue already had balances. They've told us we also need salaries and wages payable. It's a liability, so I've listed that over here. And then the last set are for the equity accounts, which is common stock, your revenues, and all the expenses. So I've listed all of those over here. The ones with balances and without balances, I've listed everything. Finally, what I have over here is the adjusted trial balance. We'll get to that later. So let's start working with the information presented. So we were given 7 pieces of information. So let's look at each of these pieces of information and we will see how to handle them. Supplies on hand at June 30th are $720. My unadjusted trial balance said I had $2,000 in supplies. So basically what's happened is at the end of June, we went ahead and counted and said we have only $720 in supplies left with us. So what happened to the difference between $2,000 and $720? It got used. To the extent it's used, it becomes supplies expense, and our supplies balance goes down. So the first thing is my date is going to be June 30th. Supplies expense will be debited. Supplies will be credited in order to decrease it. How much do I debit and credit supplies expense in supplies? The difference between what was there and what is there on hand. So $2,000 minus $720, $1,280 becomes an expense. So supplies expense debit, supplies credit, $1,280. So I'm going to go ahead and post that over here. Supplies expense debit. So let me move down over here. Supplies expense debit, $1,280. Supplies credit, $1,280. So I posted that information over there into the T accounts. Let's look at the next one. In the next one, we are told A utility bill of $180 has not yet been recorded and will not be paid until next month. So the question is, do I need to do anything right now? The answer is yes, because I got the benefit from that service from an outside party in this month. Therefore, it's an expense for the current month. So again, I'm going to write June 30th as a date. Utilities expense debit. And what should I credit? I can either credit utilities payable or accounts payable. In this case, I'm going to credit accounts payable. It's basically indicating I owe money to someone who has provided me with a goods or service. In this case, it's a service. And the amount was given to me, it's $180. Again, what would I do? Utilities expense debit. So I go down over here, and on the debit side, I'll write the 180. And accounts payable credit, 180. On the credit side, I'll put 180. So let's go to the next piece of information. The next piece of information, I'm told, the insurance policy is for a year. So let's see what I have over here in my trial balance. I have prepaid insurance of $2,880. So this policy is for a year, which means 12 months. I'm doing my adjusting entries for the month of June for 1 month. Again, so the date is going to be June 30th. The amount that has been used up, as in passage of time, 1 month has passed, I will call that insurance expense. And to the extent it's been used up, it's no longer there. So insurance expense, prepaid insurance needs to be credited. So prepaid insurance credit. And what's the amount? $2,880 divided by 12, because we're looking at 1 month. So that works out to $240. So again, to the extent I got the benefit of the insurance coverage, it has become an expense, insurance expense debit, and prepaid insurance credit. So this concept is very similar to the first one we had about supplies. We paid for the supplies, we bought the supplies ahead of time, and as we use it, we call it an expense. With insurance, with passage of time, it becomes an expense. So again, let's go down over here and see what we have. Insurance expense, debit, $240. Prepaid insurance credit, $240. The next piece of information that was presented to us is services were performed for $4,100 of the unearned service revenue by the end of the month. So let's look at what they're talking about over here. I had unearned service revenue $5,200. What this means is customers had paid me ahead of time. They had paid me in advance. It was not my money as yet, therefore had called it a liability, unearned service revenue. Now I have done the work and I can call it service revenue. So to the extent I've done the work, the liability is going to decrease and my revenue is going to increase. Again, our date is going to be June 30th. Unearned service revenue will be debited. It's a liability. If I'm debiting it, I'm decreasing it. The amount is $4,110. And this now becomes service revenue. So I credit service revenue, $4,110. Once again, let's post it into the T account. Unearned service revenue is a liability. I'm debiting it in this journal entry. So on the debit side, I'm going to post 4,110, and that gets added to my revenues. So on the credit side for revenues, I'm going to put 4,110. So my liability is decreasing and my revenue is increasing by the exact same amount because I've done the work. Number 5. Number 5, salaries of $1,250 are accrued at June 30th. When we see the word accrued, it means it has happened. What has happened over here? Who do we pay salaries to? Our employees. They have done the work for us. We have not made the payment as yet, which means in a couple days' time, perhaps I'll make the payment. If June 30th doesn't happen to come on the payday, I need to accrue the salaries, which basically means I'm acknowledging the fact that I got the benefit, I owe them the money. Again, June 30th, my journal entry is going to be salaries and wages expense debit and salaries and wages payable credit. I know the amount. It is $12.50. So a question that some students ask me is, why are we calling it salaries and wages expense and not just salaries expense? That's just the name of the account. If you had just written salaries expense, it's perfectly fine. Traditionally, that is, as in many years ago, when we had lots of factories, the people who worked in the factories were paid wages. The people who worked in an office were paid salaries. That was the only way to distinguish the two types of payroll expense, as in where the person was working. A lot of firms just combine the two and call it salaries and wages expense. Most firms these days just use the word salaries. Again, not a big deal. For the purposes of our assignment here, we're going to use the word salaries and wages expense and salaries and wages payable because we were specifically asked to do so. Now, salaries and wages expense debit. On the debit side, I'm going to post that amount. Salaries and wages payable. The word payable indicates it's a liability. On the credit side, I'm going to post that amount of $12.50. Moving on to number 6. In number 6, we are told the equipment had a 5-year life with no salvage value and is being depreciated at $250 per month for 60 months. So what does this mean? We had purchased an equipment for $15,000. We expect to use it for the next 5 years. Therefore, I need to depreciate it over the next 5 years. In accounting, depreciation is nothing but the systematic allocation of cost. Fancy words, it means I'm spreading the cost over 5 years. So 15,000 over 5 years is 3,000 per year. 3,000 divided by 12 will give you the monthly depreciation. They've already told me the amount is $250 per month. And when they say 60 months, it's basically 5 years times 12 months per year is 60 months. So they've given you the information in so many different ways, but the only piece of information you need here right now is at $250 per month. So on June 30th, my journal entry is going to be depreciation expense debit, accumulated depreciation credit. Accumulated depreciation is a contra asset account. I'm going to subtract it from equipment in the balance sheet. I already know the amount, it's $250. So depreciation expense debit, accumulated depreciation credit, $250. So let me go down to my depreciation expense account. And I have the $250 here, accumulated depreciation on the credit side. I'll have my $250 posted over here. So I'm done with that entry, that journal entry. And finally, the last piece of information presented is invoices representing $3,900 of services performed during the month have not yet been recorded as of June 30th. Okay, so what this means is I have performed the service, I've done the work. I wrote out invoices, which is basically a bill. I sent it to my customers. They have to pay me, and I have also to record it in my books that I have earned that revenue. So on June 30th, my journal entry is going to be accounts receivable debit, which means my customer owes me money. And why do they owe me money? Because I did the work. So service revenue credit. And the amount is $3,900. So accounts receivable debit, service revenue credit. I did the work, I billed my client, I just didn't do the journal entry. So I'm doing it at this point of time. So let's go up over here, accounts receivable debit and service revenue credit. So we are done with the 7 pieces of information that was given to us. We've done the adjusting entries in the book. We posted it into the T accounts. Now we need to do the next step here before we can move on to the adjusted trial balance. One quick note before we move on to the trial balance. When you're doing adjusting entries, cash is typically not affected by any adjusting entry. There are 2 exceptions. The 2 exceptions are if it's an error correction, which means I made a mistake and I'm correcting the mistake, or if through the bank reconciliation, I need to make an adjustment to cash. Otherwise, adjusting entries will never debit or credit cash. So the balance I had in cash as I started, $6,850, it stays $6,850. It's not going to change. It's going to stay that number. So here's what I need to do. I need to close all of these accounts. So I'm going to go through the process of drawing a double underline under the number if there's only one number in the T account, which means no adjustments were made. So cash, common stock, salaries and wages payable, rent expense, equipment, depreciation, accumulated depreciation, insurance expense, utilities expense, and supplies expense. So those balances, I can take them over, but I'm going to wait for a second. Let's look at the ones that have more than one item on the debit side or the credit side. So accounts payable, I had a credit balance, and within the journal entries I did, I credited accounts payable again. So I add those two numbers. And this is my balance in accounts payable. So I'm going to draw a double underline. Again, this is just to explain which numbers I'm going to take over. Any number that you see the double underline, that's the one that's going to go over. So accounts payable, 4410. Same thing for accounts receivable. I have two debits, add the numbers together, and those two numbers will now go over to the adjusted trial balance. Okay. Same for salaries and wages. Let's do the ones that have only on one side. Both the numbers on one side. Okay. So now that leaves us with the accounts that have a number on the debit side and the credit side. Oh, one more before I proceed. Service revenue had 3 credits. I added those up and I came up with the number. Okay, let's get to unearned service revenue. I had 5,200 credit balance. I debited the account 4,100. Take the difference between the two numbers and put that difference, the answer, 5,200 minus 4,100, put it on the side which has a larger balance. So I'll put it over here. This is the balance in the account. 52 minus 41 is 1,100 is a balance in the account. So that's the number I need to take over to my trial balance. Same thing for supplies. I have 2,000 debit balance and 1,280 credit. Take the difference between these two numbers. So on the credit side, I'll put the amount, 720. We go through the same process for insurance. Take the difference between the two numbers. And on the debit side, we have 2640. Okay, so now all our accounts, we have the balances in these accounts. I will come over here now and prepare my adjusted trial balance. I list all the accounts in the order in which they appear. And since I had organized them by way of types, as in all assets were together, then all liabilities, common stock, revenues, expenses, it becomes a lot easier for the following step, which we're not doing in this particular problem, and that would be preparing financial statements. So I bring cash over, the balance is 6,850. Balance for accounts receivable is 10,900. For supplies is 720. So you go down the list and bring all the balances over. So I've already done that over here. So let me bring all the numbers over here. So once I've brought all my numbers here, the last step for me to do is going to be adding up these columns. And when I add up these columns, the debit and credit column, I will get the number over here, which you see, and 45,310, that should be the same number on both sides, otherwise we made a mistake. 45,310. So that's your adjusted trial balance. You would use this to prepare your financial statements, which we'll do in a subsequent chapter. Not this chapter, not right now. So once again, in this problem, you were given an unadjusted trial balance. You were given relevant information to prepare adjusting entries. You post that into the T accounts. Then you close all the T accounts, find the balances, and you prepare the adjusted trial balance. Having the account names in order are not necessary, but if they are all listed in this particular order, as in all assets are grouped, liabilities are grouped, equity, revenues, expenses, it's a lot easier for the next step. That's the only reason it's advisable to do that. Also, if you would see over here, all these words have expense. So you know these are all expensive with debit balances. So a lot of what you would see over here is the more you have this organized well, the easier the process is going to be for you. So I hope this helps you with understanding the first 5 steps of the accounting cycle. So with that, we conclude this particular video, and we will have to start working on getting ready for our first exam.